Hey, hello everybody, and welcome back for another week with our Southern California housing market update. My name is Stephen Mead with Domicile real estate for people who love houses. And this is our update for September 22nd, 2020. And just as a reminder, Southern California, we run our market stats based on Orange and Los Angeles counties. Though obviously, if you have questions about other areas, definitely leave them in the comments of California, and we'll see what we can do to help. If you are watching on YouTube, do not forget to like and subscribe and possibly leave a comment, but only if you're nice. And if you are on Facebook, we welcome your questions. Anyhow, if you've looked at the title of this week's video, basically it says that we screwed up. And you know, this is something that I absolutely loathe to do, but anybody who knows me understands how important I believe it is, and that is to admit when we have made a mistake on something. And I'm gonna jump right in and I'm gonna explain sort of where we made a mistake on something, and because we want you to have the most correct information that you can possibly have. Like, that is very important to us here at Domicile Real Estate. So this is our graph from last week on our new listings, and you'll notice here, we're looking at our graph that we have a giant spike in new listing inventory. Now, this really should have caught my attention as possibly something wrong, but something that we've talked about, or that I've talked about, I know in the past, has been kind of this idea that you want to double check your data and you want to look for confirmation bias. I felt like we have been missing new listings all year long. And so when I finally saw this happening, it was validation that my prediction was correct. The problem is that data was not correct. And you know, let me kind of come out of screen share and I'll explain a little bit. So one of the stats that we use that we like to look at is the new listings that were input into the MLS each week. I think this is an important statistic. It shows how active are sellers about placing properties on the market. I think that's a very important gauge of sort of supply. And the MLS had a data importation error for the last 3 weeks. It was the most pronounced last week. They imported data from Pasadena's MLS from 20 years ago and were labeling them as new listings. I really should have caught it. In fact, we caught it this week when we were doing our first-time home buyer market update. So, you know, if you watch that one, that data is all correct because we actually found the mistake there. And what we've done is I've gone ahead and I've redone the last 2 weeks of data, 3 weeks if you include this data, and corrected and pulled all those erroneous listings out. So I've got actually an accurate graph here. And one of the problems is when your new listing information is off, it also means that your absorption rates are wrong as well. So if you look here on the chart, we got a big X through these two. These are wrong. You'll notice our absorption rate, if you're looking here, our absorption rate totally plummeted. This is also inaccurate. But what we've done is we've gone back and corrected the data. So here's the accurate data for new listings over the last 3 weeks. And while new listing data is indeed up over where it's been, which is actually pretty amazing for the fall, that's unusual in our market, it's not up at nearly the same levels as we talked about in our video last week. It's not nearly the kind of sea change in the market. If we go to sort of our new pending data, or if we look comparing to 2019, I think this really illustrates that point that I'm making. Yes, the numbers are way better than they are last year. In fact, they're really good for the month of September, but that's, you know, they're not that 50% increase like we were seeing in the data that was misreported last week. Again, that was the result of erroneous data. We are actually working with the MLS. They are trying to track why that is happening on one of their data feeds from the Pasadena MLS. If we look at our new escrows this week, though, we see something interesting that I think is really, really important. And that is that these new escrows, this week they came down a little bit, but generally speaking, they are up over the activity of the last month. And I think that's important because it shows just how robust our market demand is. Even as prices go up, even as we go into fall, the buyers are still out there. They haven't fallen off a cliff, which is sort of normally what we start to see in the fall. Those buyers just really slow down, but it's not happening that way this year. Now, if we look at our restated, or if we, let's compare this to last year. I forgot which order I put these in. Again, we have a sizable improvement over 2019. I think that just shows you sort of kind of the general strength of the market in terms of healthiness, and sort of this idea that maybe we're catching up a little bit for a lot of the deals that we missed. A lot of experts are actually predicting that we're going to end up with about the same number of total sales as last year. That's actually pretty amazing when you think about it. It means despite COVID, despite all this, we are going to end up with the same number of transactions that we had last year. I think that's pretty indicative of a very robust market. I still believe that. And again, our new escrow data wasn't wrong for the last couple of weeks. It was only those new listings that we had errors in the data. Now, this is our new absorption rate graph that is corrected. And I think this tells a bit of a better story. So if you look here, especially in this under 1 million category, we really had some spikes there where we were above 80%. Just to give you guys a little bit of context, 80% is a very sort of strong seller's market. Above 80% is sort of a crazy nuts circus of a market. So, I think the way to read this graph is if you are a buyer out there, yes, it is still very brisk. The nice houses will get multiple bids when they're priced right, but it's not quite the same level of craziness. It's not 17 offers that go $100,000 over list. It's not quite that kind of a market as maybe it was a month or so ago. And you can sort of see this, if you look here, you can kind of see us coming down to this 80% mark. In our luxury market, our 1 to 2 million, we're kind of hitting just those nominal numbers. Again, it's a little bit of a downward trend for this absorption rate. That's to be expected as people see what houses are selling for. There's more listings coming online, and there are, but we also have a lot of buyers who are kind of soaking a good amount of that up, and they're keeping this from really being a balanced market, right? A balanced market is going to have these absorption rates below 80%, and we're not there. So if we take a look at pricing, we kind of have some other news this week going on for pricing. And that is, we kind of hovered here in this mid 630s range. And again, this is our average pending list price because we're trying to capture data that's a little bit more recent than the solds. We hopped back up another $7,000. I don't think this market is entirely done growing. I think we are still supply constricted. Now looking at that revised data, we don't have this sort of influx of new listings that's just really kind of keeping the prices in check. As rates remain low, I think buyers are still kind of rushing to get into the market. If we take a look at our list to close ratio, right? And remember, what we're doing here, and this is for our under $1 million houses, is we are looking at the houses that closed sort of in the last week. And we're trying to see, well, did they close above their list price or did they close below it? And, we've pretty much firmly been above that since about the middle of July. And, that actually doesn't show signs of stopping. We're definitely seeing there's multiple bid activities. This is all indicative of a supply constrained market where sellers are sort of misjudging where their pricing is going to end up. If we look at our pending price for our 1 to 2 million, we do see a pretty significant drop. One thing to remember, and I've talked about this before, is trying to remember the idea of data set sizes. And, the way you can look at it is this: the longer period of time that I measure data, the smoother that data is going to be, right? It's not going to bounce around week to week. It's going to be a very steady number. The problem with using, say, a month of data, right, is that you get a big sample size. So it's nice and smooth if we look back a month, but it also means that figure is also very slow to change, meaning there could be a huge change in the market and we wouldn't know it for a couple of weeks. So, we kind of pick a balance on this. And for the $1 to $2 million homes, they're just a lot fewer sales than under 1 million. So we see this number bounce around a bit. I don't really ever look to anything as gospel unless it's happened like several months, several weeks in a row. And then I start to think we might have a little bit of a trend going. Sort of our health check on our market healthiness level, right, is this days on market for new escrows. And, as I mentioned in the past, this figure says, let's look at all the homes that went into escrow this week, So these new contracts, how long did they sit on the market before they went into escrow? And as you can see, our sort of average time for that is still extraordinarily low, under 30 days. It's a little bit longer in our more luxury oriented houses in our 1 to 2 million range. But the reality is these are very short time periods, and they indicate that the supply demand relationship, which is really what we're always trying to gauge, right? If you're a buyer or a seller, that's probably the most important thing for you to understand, is where is that supply and demand relationship. And this short days on market means we are still very much in the not enough supply end of that sort of discussion. It's definitely tilted towards, it's definitely tilted in favor of the sellers, that sort of balance of supply and demand. Finally, I want to go over our affordability stats this week. And this is our payment on a median priced home. And we kind of go back and we normalize these to June of 2018. And so we try to take a look and say, where are we? And, things were really low towards the beginning of this year. And then we've seen them spiking through here a little bit. Still cheaper than last year as a whole. And again, this is for Orange County homes, single family and condos. But one of the things that's interesting is what's driving this is we are starting to see these median price sales go up. Now, remember, a median home price is a statistic that is 30 days old, right? Because we're looking back to houses where the deal was signed 30 days ago. That number is now at 800,000 in Orange County for the median sale price. That's nuts. I mean, that is a really big figure, and that's sort of what's driving these increases. It's not interest rates, which remain low, and in fact are kind of shielding us from these payment increases. I hope you guys have enjoyed this. And one of the things that I think is really important to remember in the real estate business is that this is a business of trust. You are asking questions and getting advice from someone that you need to trust. And that's why we always want to be open with you about our data. And even when we find mistakes in the data, we want to be open and clear about that. Anyhow, don't forget to like and subscribe. And also, if you haven't already, keep a lookout for our first-time home buyer market update, which is geared specifically towards entry-level properties, where we measure the availability and the affordability of those prices. And for a lot of reasons, those markets move a little bit differently than our sort of whole market statistics that we discuss here. So if you're a first-time home buyer or know someone who you think should be a first-time home buyer, definitely check that out. We will see you next week, and have a great week, everybody.